Welcome to 5 Minute Realty Talks. I'm Nadia Ali with Samson Properties here in Northern Virginia. Today, let me ask you, what if you could sell an investment property, reinvest every dollar, and make the IRS wait? That's the power of 1031 exchange. So, what exactly is it? A 1031 exchange, named after Section 1031 of the Internal Revenue Code, allows you to defer capital gains taxes when you sell an investment property if you reinvest the proceed into another like kind property. What's truly powerful about 1031 exchange is its ability to defer capital gain taxes, build wealth, enhance diversification. In short, instead of handling profits to the IRS immediately, you keep that money working in your next investment. So, who exactly benefits most from using this strategy? This isn't just for large corporations. Active investors can scale their rental properties, passive owners can shift into properties that require less management, developers can upgrade projects without losing capital to taxes, high net worth investors can manage sizable portfolios more strategically. If you own investment real estate, this tool can help align your assets with long term goals. This tool, you need to know the rules, and the IRS is very strict about timings. The exchange works under strict guidelines. Within 45 days of selling, you must identify replacement properties. Within 180 days, you must close on one of them. Proceeds must be held by qualified intermediary, not you, not your account. Miss a deadline or mishandle funds, and the exchange is void. The IRS does not grant extensions. So let's make this real with a quick example. You sell a rental for 500,000 with a 100,000 gain. Normally taxes eat into that gain. Though a 1031 exchange, you roll the full 500,000 into a 700,000 property. No immediate taxes, greater buying power and stronger long-term return. And that's where the real wealth building power comes in. Repeating this strategy compounds your portfolio's growth. You can upgrade into higher value assets, diversify across residential, commercial, or land, consolidate holding for efficiency, even structure exchanges into estate planning. It's one of the few ways to legally compound wealth using pre tax dollars. Here is what many don't realize. If you keep exchanging and pass properties to your heirs, they received a stepped up basis that can wipe out decades of deferred taxes, turning the 1031 into both a growth and state planning tool. Now, there are multiple types of 1031 exchange: simultaneous exchange, delayed, the most common, and advanced versions like reverse or improvement exchange for more complex strategies. So, when selecting your replacement property, think strategically. Look at markets with strong rental demand, consider different property types, and make sure the exchange aligns with your long term financial goals. But it's not just about growth, you need to know the fine print. Let's look at some pitfalls. Some common pitfalls where do investors stumbles are the missing 45 or 180 day deadline, misidentifying properties that don't qualify as like kind, attempting the process without a qualified intermediary. Each mistake can trigger an immediate tax bill. Precision matters. It's important to note a 1031 exchange deferred taxes. It does not eliminate them. Capital gains and depreciation recapture still apply down the road. And if you take cash or reduce debt in the exchange, that's called a boot, which is taxable. A quick reality check: 1031s apply only to investment property, not flips or personal homes. Some states have extra reporting rules, and if you decide to cash out instead of reinvesting, those deferred taxes will come due. Three key takeaways. Here's what I want you to remember. A 1031 exchange differs, not eliminate taxes, but let you reinvest full proceeds. It accelerates portfolio growth through scaling, diversification, and strategic planning. Success depends on strict compliance and the right professional guidance. So, if you're preparing to sell an investment property, don't just think about price, think about strategy. Let's discuss whether this approach fits your investment goals and how to position your next move for maximum advantage. Thanks for joining me today.